tax planning mistake number 4, the failure to keep adequate receipts for business expenses, and you risk losing tax deductions if you're audited by the IRS. My lady that came in from Fort Thomas. It's one of those things that I would tell you there's 3 really important strategies for not worrying about an IRS audit. You know what the 3 strategies are? Documentation. You know what number 2 is? Documentation. You know what number 3 is? Documentation. I've been through audits for the last 40 years. If you have documentation, signed off, no problem. You don't have a documentation, disallowed. IRS is getting tougher, I got to tell you. They've been training agents, or this lady got audited. She actually got audited for several reasons, but the thing that concerns her is that does she have the documentation to substantiate what she has deducted on her tax return? And let's talk about credit cards. I always recommend clients use a credit card for business and a credit card for personal, so it helps you identify when you're making the purchase that is a business expense. So if you can do that, that's good. Sometimes there's an overlap, but I recommend that. I also recommend you use a credit card for your business like I do, and you get the points and you get the travel. I've been doing that for years. I'm talking about years. So I try to put everything I can on my credit card. I pay it every month. There's no cost then. And I get all these points and I get the travel. It's great. I love it. Okay? Actually, the best credit card, I will tell you, is American Express Starwood Preferred. Excellent. The hotel rooms at the Sheratons and everything are fantastic, and you get more bang for your buck than having a Delta card that gives you 1%. You get 2, 3, or 4% on your travel. So it's been fun. But let's talk about the credit card. The credit card is a proof of payment, but it's not a receipt for tax purposes. I've been in audits, and if the client cannot come up with the receipt that backs up the payment and the charge on a credit card, disallowed. The IRS doesn't know whether it's Amazon or Office Depot or whatever, whether the expense was you went out and bought all your groceries for your family or you bought something for your house. They want to see the receipt. So you know what? There's a simple solution. The solution is you have an envelope every month. Just stick your receipts in the envelope. Just keep your receipts. And if you get audited, you pull out the envelope, and at least you got the receipt, and then you go through it and you organize it and sort it out month by month. And that's why you might want to put receipts in an envelope every month. Depends on how much you use your credit card. But it's real simple. If you're paying by check, keep a receipt. Just have a receipt for everything. That's all you have to do, and you're okay. Now, how do you report your income? I always tell you, if you're audited, they want to say, and if you have any cash, you say, I put all my revenue is deposited in my bank account. You got to have that as a policy. I'm not trying to tell any business owner that they should cheat on the government and the law. So we got to report all the income, but we try to save taxes by maximizing the deductions and making sure we have documentation for those deductions we have. Now keep in mind, you just don't spend $1 to save 46 cents. So you only buy things that you really need. Otherwise, you're going to be ahead if you maximize your profits. That's okay. I'm okay myself if I can pay more taxes. It's a better year than last year then, right? Nothing wrong with that. But I'm still there trying to do what I can in the pension plan, the HSA, and I want to make sure that my business expenses, and that's another thing that you look at, that if you know you're going to have an expense typically within the next 6 months or so, you can accelerate that expense into, it's too late for 2016, but this is the time to do planning for 17. And so when you do your business plan, you want to start planning the end of the year what receipts you may be, what purchases you may want to be making. So you might make them in the end of the year to get that tax write-off. You might prepay some expenses. I did that last year for purposes of Trump. He's supposed to reduce taxes for business owners, right? We don't know if it's going to be 15, 20, 25%. So my strategy was to go out and prepay advertising expenses, prepay expenses for my tax return processing fees in order to save taxes in 16. I knew my tax rate isn't going to be higher, but it could be lower next year.